All right, let's talk about Nvidia, because it's obviously been the fan favorite this year. It seems like it's so much ahead of every other chip maker out there when it comes to especially AI. So is it poised to maintain its dominance as we think about next year?
Well, Caroline, as we look into next year, Blackwell is really going to have a transformational impact for Nvidia. However, what I would highlight is that unlike Hopper, where it was going in existing data center infrastructure, the Blackwell chip requires whole new data centers due to its power requirements. So we're going to see Nvidia benefit maybe a little bit at a slower and a more volatile pace than what we saw with Hopper, but we're also going to see the broader value chain like networking, power generation, all of those areas will significantly benefit as we go into next year.
So will that be enough to power the stock higher? Because I think that, you can't underestimate it. It's up more than 180% year to date, but whereas we've seen new highs for the market, Nvidia is still 8% away from the highs. So it's, still seeing a really impressive run up, but we haven't seen the strength in the stock like we have some other areas of the market. Do you think that we'll start to see that again?
So absolutely. As you see the Blackwell numbers come through in earnings, that's when you're going to see the stock rally up, the next leg up for the stock, right? So here it's trading right around the mid-20s on EV/EBITDA basis on 1 year forward. That's what we look at. And we think that's a good baseline for the stock. So the surprise really has to come from earnings, and we do expect a pretty significant surprise. We expect over $200 billion in revenues just from.
One of the stocks that visitors are now keeping the greatest eye on is Nvidia. Therefore, it could be wise to examine some of the variables that could influence the stock's performance in the near future. Compared to the S&P 500 composite, which changed by plus 5.2% during the previous month, the shares of this manufacturer of artificial intelligence and gaming graphics chips have returned 2.6%. Nvidia is a part of the semiconductor general industry, which has increased 2.8% during this time. The crucial query at this point is, where might the stock go in the near future? However, news reports or speculation on a significant shift in a company's business prospects typically cause its stock to trend and cause an instantaneous price movement. The buy and hold decision-making process is ultimately dominated by a few basic facts. Above all things, we give top priority to evaluating the shift in a company's profits outlook. This is due to our belief that the fair value of its shares is determined by the present value of its future earnings stream. In essence, our analysis is predicated on how sell-side analysts who follow the stock are updating their earnings projections to reflect the most recent developments in the industry. The fair value of a company's shares increases in tandem with an increase in profit projections. Additionally, investors are more likely to purchase a stock when its fair value exceeds its current market price, which causes the stock's price to rise. Consequently, empirical studies demonstrate a strong correlation between trends in earnings estimate revisions and short-term stock price fluctuations. It is anticipated that Nvidia will report earnings of $0.83 per share for the current quarter, which would represent a change of plus 59.6% from the same period last year. Over the past 30 days, the consensus estimate has changed by 6.7%. The consensus profits forecast of $2.93 for the current fiscal year indicates a change of plus 125.4% from the previous year. This estimate has changed by 4% in the past 30 days. The consensus earnings estimate of $4.14 for the upcoming fiscal year is a change of plus 41.2% from Nvidia's predicted earnings report from the previous year. The estimate has changed plus 9.1% in the last month. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
So would you be a buyer on any Nvidia weakness?
Absolutely. It's actually one of our top holdings, so we're still holding it. We think there is some more upside in some of our other holdings. We disclose all of our holdings on our website in terms of near term, but we think when Blackwell comes through, that's when you're going to see the big leg up. So I think if you're a patient investor, this pullback is a pretty good entry point.
Okay, and just quickly, before we actually trade NVIDIA, I do want to ask you just in terms of some of the competition. We really haven't seen anyone give NVIDIA a run for its money. AMD is the one that we kind of home in on, but from a stock perspective, it certainly hasn't been nearly as successful. Do you expect others to start to catch up, or will AMD make more ground, gain more ground?
So interestingly, Caroline, this year we saw less competition than we had originally expected. The next leg of competition we expect will come from the hyperscalers developing their own chips. Marvell here is very well positioned to benefit, so they're working with hyperscalers like Amazon and Microsoft in bringing these chips to market. So we see that area gaining traction as we look into next year, as they already have the installed base of customers.
Okay, Ivana, stay with me.
Three other earnings-related variables, in addition to the magnitude of the most recent shift in the consensus estimate, have led to the recommendation to buy Nvidia. Even if earnings growth is perhaps the best measure of a firm's financial health, if a company can't increase its revenues, nothing happens. After all, without expanding revenues, it is almost hard for a business to sustain a long-term increase in earnings. Therefore, understanding a company's potential for revenue development is crucial. The current quarter's consensus sales forecast of $37.74 billion for Nvidia indicates a plus 70.8% year-over-year change. Changes of plus 110.9% and plus 48.3% are indicated by the $128.48 billion and $190.55 billion forecasts for the current and upcoming fiscal years, respectively. In the most recent quarter, Nvidia posted revenues of $35.08 billion, which is a plus 93.6% year-over-year improvement. EPS of $0.81 for the same time period is higher than $0.40 for the same period last year. Reported revenues are a surprise of plus 5.27% when compared to the estimated $33.33 billion. Plus 8% was the EPS surprise. In the last 4 quarters, the company has exceeded consensus EPS projections. During this time, the company consistently exceeded consensus revenue projections. Without taking a stock's valuation into account, no investing choice can be effective. One of the key factors influencing a stock's future price performance is whether or not its current price accurately represents the underlying business's intrinsic value and its growth prospects. It is possible to determine whether a company's stock is fairly valued, overvalued, or undervalued by comparing the current value of its valuation multiples to its own historical values, including price to earnings, P/E, price to sales, P/S, and price to cash flow, P/CF. Additionally, comparing the company to its peers on these metrics provides a good sense of how reasonable its stock price is. The Value Style Score is a useful tool for determining if a stock is overpriced, appropriately valued, or momentarily undervalued. It grades stocks from A to F by closely examining both conventional and unorthodox valuation indicators. On this front, Nvidia receives a failing score, meaning that its price is higher than that of its competitors. Determining if it's beneficial to pay attention to the market buzz surrounding Nvidia may be aided by the data covered here and a wealth of other information. It does, however, imply that it might do better than the overall market in the foreseeable future. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Listen, how would you trade this name?
Well, you got to look at it this way. It's a high-price stock, so maybe the option market might give you a little bit more opportunity where you can offset some costs on a bullish position here. So I looked out into the December 27th weekly cycle. So 25 days to expiration. So giving myself a little bit of time. If this Santa Claus rally continues, do all stocks continue to move higher? Or in Nvidia's case, after 2.6% losses last week, does it rebound? This strategy takes advantage of it, where I'm going to buy one of the 138 strike call. That's slightly in the money. I'm going to sell two of the 145 strike calls and then buy one of the 147 strike calls. So in essence, you're buying a $7 wide bullish call vertical, offsetting some of the costs by selling that $2 wide call vertical above it with that same common strike where you sold two options right at or near 145. That's where you want the stock to go. But if you pay a debit of about $2.30 for that, your break even to the upside, 140.30 to the upside. That's less than 1% above the current share price. So you don't need a massive move to the upside, just a grind higher. You want it to go to 145, but even because you made it an unbalanced or broken wing call butterfly, anything above that break even, just above 140, is going to be profitability on this type of position. Now, your profit goes down a little bit above the 145 strike, but it's still more than a double on this type of trade. If it even does go up to 147, 150, anything above those areas, this is a really short-term position if you think this stock, Nvidia, is going to rally into the end of the year.
Before a storm, there is quiet. Perhaps the best illustration of it is Nvidia. Despite a slight decline, Nvidia was still in a buy zone on Friday morning. Since October, Nvidia has fluctuated between buying and selling, according to its data. Stocks should ideally climb after breaking out of bases rather than move sideways. Does that imply that Nvidia is currently a buy or sell? According to reports on Friday, the giant of AI chips was negotiating with Taiwan Semiconductor to begin producing its Blackwell chip in Arizona. Nvidia's most cutting-edge chips have so far been produced in Taiwan by TSMC. The strategy might be a means of avoiding the tariff threats posed by the Trump administration. Previously, less sophisticated chips were to be produced at the Arizona plant. Thus, Nvidia trading is still in a wait-and-watch phase for the following three reasons. The stock is in a buy zone. To start, however, Nvidia's volume has been lower, which indicates that large financial institutions, such as mutual funds, have not been actively trading the stock recently. Purchasing stocks that funds are also purchasing is the greatest option. The volume of the purchase point retake on Wednesday morning was 30% below the typical level for Nvidia stock. Second, funds have been reluctant to purchase the company recently, despite the fact that its price performance has outperformed 95% of other stocks in Investors Business Daily's database. Price and volume action during the last 13 weeks are measured by the accumulation/distribution rating, which is just D. Once large sums of money start coming in, shares can rise rapidly. However, following the company's all-time high of 152.89 last week, the relative strength line, which contrasts the stock with the S&P 500 index, saw a significant decline. This indicates that Nvidia hasn't been keeping up with the index's recent advances. Waiting for the coup to fill up is the greatest option. After software giant and Dow Jones component Salesforce released impressive results late Tuesday, shares increased by more than 3% on Wednesday. Analysts are keeping a close eye on Salesforce to see if its investment in self-governing AI agents will yield a profit. Price and volume action during the last 13 weeks are measured by the accumulation/distribution rating, which is just D. Once large sums of money start coming in, shares can rise rapidly. However, following the company's all-time high of 152.89 last week, the relative strength line, which contrasts the stock with the S&P 500 index, saw a significant decline. This indicates that Nvidia hasn't been keeping up with the index's recent advances. Waiting for the coup to fill up is the greatest option. After software giant and Dow Jones component Salesforce released impressive results late Tuesday, shares increased by more than 3% on Wednesday. Analysts are keeping a close eye on Salesforce to see if its investment in self-governing AI agents will yield a profit. According to Jordan Kleen, a Mizuho analyst, the limitations appear to be reasonable or less stringent than expected. Additionally, fewer firms than anticipated were listed on the limitation list, according to Piper Sandler analysts. Piper Sandler analysts increased their price target from 140 to 175 in November, predicting a 20% increase in the stock. Nvidia stands to benefit the most from the growth of the AI accelerator business as a whole, which Piper Sandler projects will reach $70 billion by 2025. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.